commitments they made. I think he's going to have to look at whether he wants to put on across-the-board tariffs, as he's talked about, which is a form of a consumption tax on foreign imports. If that money was used to pay down debt, that's one thing. It may be a source of funding for the tax bill. I think as it relates to Mexico and Canada on February 1, I hope that Mexico and Canada come to the negotiating table and do whatever he wants them to do on the immigration issue so that those don't get implemented. I think that would have a very negative impact on many of our economic issues and supply chains, particularly with Mexico.
You know, there are some who seem to be optimistic somehow that nothing has happened in this first 24 hours with regard to China that indicates there's a deal to be done, but I don't. Where are you on that? Do you think that there is a deal to be done with China, or are your expectations more towards that there eventually will be significant tariffs?
Well, I think President Trump has been very strong on saying that he wants to implement tariffs. He wants to use them to raise revenues. He's talked about the External Revenue Service. I mean, in essence, we have an External Revenue Service. Customs and Borders is the one that collects the tariffs. So they could break the group out of that and name it the External Revenue Service. It's not the IRS that does that. He said in his inauguration speech yesterday, again, it can be a great sense of, well, I think the sooner that you can give clarity to the market as to what we expect in the plan, the better off we'll be.
Steve, I know you've always been concerned about social issues and the idea of equality in the country. It's been one of your hallmarks when I've spoken with you. What do you think about what former President Biden talked about in terms of the oligarch society, and whether that is something we should be concerned about as a nation?
Look, I think that President Trump in the first term was very pro-business, and you see this in the second term. And I think it's great that the technology companies are coming to the table and looking to work with the administration in a constructive way. These are some of our greatest assets and some of our most important businesses. And I think it's very good that there's a working relationship with business.
And finally, Stephen, to come back and just end on TikTok if we can. I mean, you pursued it to some extent, and then obviously I assume that effort went on hold. Have you resumed sort of putting together, potentially having the money available should the opportunity arise?
Well, we only put it on hold because it was clear that China was not willing to negotiate. And now that President Trump is willing to look at a deal, obviously we're going to follow this very closely over the next 75 days. And we'd be very interested in investing in the business. It's a terrific business. And we'd have a technology plan to rebuild the technology.
Right. I mean, you're not alone, obviously. Yet the price tag could be enormous, couldn't it? I mean, you know, again, based on the opportunity there for TikTok US and some of the others as well around the world.
Well, I think TikTok US is worth a lot of money. It's a great business, and if it's managed correctly, and it can grow into other areas such as e-commerce and expand in the US. It's a terrific business. On the other hand, I think that it does have national security issues. There's no way that China would let any of the U.S. companies operate in this way. Elon commented that X can't operate in China. So I think this is part of, there's got to be a level playing field between the U.S. and China economic relationship.
Yeah. All right. To be continued. And always appreciate your taking time. Thank you. Steve Mnuchin, Steve Mnuchin, former Treasury Secretary of the United States.
Excellent. So bullish. Incredible. He's a market guy. He knows markets well.
Thinks AI, maybe that was interesting. A little aside there.
I thought that was interesting.
I mean, again, that is going to be a key question this year that we entertain many times. The hundreds of billions of dollars being spent in CapEx by our biggest companies, the hyperscalers, and whether they will start to see a return on that or whether investors will start to push back.
Do you want to be part of the Industrial Revolution, or you want to let it go right in front of your face?
Well, as we were talking, Trudeau on the tape saying the golden age of America is going to require Canadian resources, and he's not against dollar-for-dollar tariffs.
Dollar-for-dollar tariffs. Okay, we'll take your... Well, we like their water, their oil.
Out there, lumber.
So-
When we come back, CEOs of the World Economic Forum in Davos. Our Sarah Eisen is there. Morning, Sarah.
Good morning, Carl. It's good to see you guys. Yes, world leaders, CEOs. It's a different vibe here in Davos with President Trump back in the White House. I'll share some takeaways and conversations from the ground. We will also do a deep dive on the U.S. consumer, which has been powering the U.S. economy with two top CEOs in the space. We're going to talk to the CEO of PepsiCo, Ramon Laguarta, as well as the CEO of Gap, about what they're seeing right now and whether the optimism that is shared by a lot of business leaders here around the new presidency will translate into higher consumer confidence and spending. That's all when Squawk on the Street comes right back. Stay with us.
BC.
I think that the number one way that Musk can affect the budget is to go after Medicare. That is the big one. You can't do interest. You certainly, I don't think you can do Social Security. But Medicare, there's a lot of fat. And I felt that way after I came back from San Francisco in the healthcare conference. That is where I think he's going to make his most progress.
People are going to start looking for the rubber meeting the road.
Oh, yeah. There's some stocks you don't want to own, and I'm going to talk about them tonight.
Look forward to that, Jim. We'll see you tonight. Mad Money, 6 p.m. Eastern Time with the Dow up 250. Don't go away. Good Tuesday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange. Sarah Eisen joins us from the World Economic Forum in Davos. She'll bring us the latest there in just a moment. Markets this morning adding to some gains after a good week last week. Treasuries coming back to about a 3-week low. Three big movers we're watching this morning. 3M's a top gainer after beating top and the bottom line estimates, issuing some strong guidance. Two firms downgrade Apple today, Loop Capital to hold, Jefferies to underperform as both firms get bearish on iPhone demand. And then there's Bitcoin hitting some record highs before Trump's inauguration, holding 100K. We'll get some more on crypto coming up. Meantime, the president taking office with the most expensive stock market in history. The Journal today highlights that American stocks 83% more expensive than when Bill Clinton first took the oath, 145% more than when Obama began his term, and 4 times Reagan's starting point, or even a third pricier than the start of Trump's own first term. Let's talk about how to position from here. Joining us this morning, Lizanne Saunders, Charles Schwab, a chief investment strategist. Lizanne, good morning. Good to have you.
Nice to be here. How are you, Carl?
It's an interesting morning for us because there is so much policy discussion, even as we're in the middle of getting some corporate commentary about the quarter. I wonder how much uncertainty you think that feeds into at least the rest of January.
Well, we may have alleviated some of the tariff-related uncertainty in terms of what got announced on day one, but it was even later in the day on day one that the administration came out and said they're still planning on going ahead with tariffs on imports from Canada and Mexico. So I think that's the one page from the 2018 playbook that is relevant this time, is the uncertainty associated with just how and when these policy announcements get made. But, you know, it helped allow for a turnaround in the equity market. You've generally been seeing the dollar trending lower, at least over the past 8 days since the recent peak. And on a day like today, with yields down sub 4.6% on the 10-year, I think that's helping to give a lift to the Russell. But the uncertainty is not past us for sure.
Are you surprised at the way the market, or at least the bond market, has taken tariff headlines or the lack of tariff headlines and processed them into lower yields?
Well, that's just, a day's action. And I think we have to remember that although volatility has been subdued in the equity market, at least as measured by an index like the VIX, it has not been subdued in the fixed income side of things if you look at an index like MOVE. So I continue to think that we're going to see volatility in Treasury yields tied to policy, as well as the actual incoming data, both on the inflation front and on the employment front. And I think that is a feeder into equity market behavior. We've got different thresholds that tend to cause problems for the overall market versus, say, just small caps, which do have that heightened sensitivity to moves in yields because those smaller companies tend to have more variable rate debt. So I think these day-to-day gyrations are going to be with us for a while.
Right. I assume you think that pain threshold on the 10 is around 5. It was interesting to hear the former Treasury Secretary with us a moment ago thinking maybe the administration can work that down to maybe 3.5.
How? I think that's the obvious question is how one can go about doing that, because all else equal, the combination of proposed policies on immigration and tariffs, again, all else equal, puts downward pressure on growth, but upward pressure on inflation. And if we look at the immigration side of things, the constraint on workforce growth, that also is all else equal, puts upward pressure on inflation. It's hard to envision a scenario like that if it comes to fruition, allowing for yields to move down from, call it 4.5% to 3.5%. That may be the stated goal, but I think there would have to be a change in some of those policies.
Finally, Lizanne, do you think the tax issue in the scope of the whole year will be the most important question for equities?
Possibly, but not to the same degree as we saw the benefit of the 2017 tax cuts accrue to the equity market and to the economy, because we're now just talking about the extension of the 2017 Act, not a whole new round of tax cuts. And I think that's why you may be seeing a little bit more muted action on the part of a lot of the survey data with regard to tax policy. I think there's less optimism because we're dealing with an extension, not a rash of brand new tax cuts.
Lizanne, it's going to be interesting in the coming weeks. Look forward to talking again soon. Thanks for coming
Thanks,
on. Liz
Rob.
Ann Saunders.
My pleasure.
President Trump did hit the ground running. He signed dozens of executive orders yesterday. This was just shortly after he was inaugurated. Megan Cassell is here. She's got a closer look at some of those orders and that may become very important for investors. What do we know here, Megan?
Hey, David, good morning. So almost 4 dozen of these executive orders signed yesterday, but the meatiest ones, I would say, fall into 3 main themes. The first, of course, being the economy. There's some deregulation on the energy front, things like ending the LNG pause, cutting EV mandates that President Biden had put in place. There was an order to delay enforcement of the TikTok ban by 75 days, while Trump is looking for China to sell at least 50%. And there was this somewhat surprising move on trade policy, ordering a review of trade deals and relationships. That's due out April 1st, but stopping short of imposing any tariffs. Trump later did say that he is looking at February 1st next week to potentially place tariffs on Canada and Mexico. So no action on that front for now, but that does not mean that it's not coming. There was still a lot of talk yesterday on an external revenue service and tariffs making the country rich. So those objectives remaining in place. We also then saw a slate of moves targeting the federal bureaucracy. Trump formally established DOGE, the Department of Government Efficiency, ended telework policies for federal employees and stripped some job protections for career officials as well. And then he put in place a freeze on both hiring and regulation. And then the third bucket is what I would call sort of global withdrawal, almost isolationist in some of these moves. Trump pulled the U.S. out of the Paris Climate Accords, the World Health Organization, and the OECD global tax deal. He's ending asylum, trying to end birthright citizenship, and he issued a 90-day pause in any foreign development assistance. So sort of a striking split screen here, guys, with Davos going on this week. America First was threaded throughout every piece of these actions signed yesterday. And then finally, one last thing to flag. The White House has told us to expect what they're calling as a big infrastructure announcement later this afternoon. So more to come on that front. Guys.
Big infrastructure reminds me of the first Trump administration. Every week was infrastructure week. Megan, you know, I noticed the shares of a number of the electric vehicle makers, particularly Tesla, but also Lucid and Rivian, are down. Is that because of the? I mean, is that the Paris climate pulling out of that, or the rollback potentially of IRA? What do you make of it?
It could be any of those things. Also ending these tax credits that were incentivizing people to go with electric vehicles, all of that now being off the table. I think it could be any one of those. But what we do know is that there's going to be much more to come on this front. There could even be further regulation. Ending EV mandates is what they're calling it for now. But how much more does he want to get back in there to really boost the American automakers that might lean more heavily away from electric vehicles? So much more to watch. I think it's a combination of all of that.
Look forward to some more headlines after the close, Megan. Thanks. Megan Cassell, a busy morning in D.C., obviously. Busy morning in Davos as well. Let's get back to Sarah, talking with some of the world's top business leaders at Davos. And I know one of the main topics, at least in this early part of the week, Sarah, is AI.
Hey, Carl, I got to say there's a lot of optimism here in Davos from the world leaders and the CEOs around the Trump administration and some of the policies pro-growth, bringing business back to the table to have a seat, deregulation, the things that we hear about from CEOs daily. I think that has spread. And interestingly, I came in thinking that some of the global CEOs would be more worried about tariffs and the impact on global growth. And in fact, I haven't heard that much discussion around tariffs. It's more on, will those pro-growth policies and the sort of wave that Trump is ushering into the U.S. rub off on places like Europe and the UK? I know deregulation isn't necessarily what you think of when you think of Europe, but just looking at the kind of excitement that is building around some of these Trump policies and how that could really change the way governments look at their own policies around the world. Another major source of optimism here in Davos this year is AI. Now, in previous years, it's all about hopes and dreams and perils of AI. This year, it's not. We're there. It's not experimentation phase anymore. It's companies utilizing generative AI and how they're actually saving money, productivity savings, and using it for growth. That was the subject of a panel that I moderated this morning. And it had the CEOs of Aramco and PepsiCo and Sanofi, Accenture, and AWS, and gave us a pretty good peek into the way that companies are using AI and how they're going at different speeds. One of the moments that stood out to me the most was Aramco CEO, Amin Nasser, talking about how the energy company, how much he has spent billions of dollars and reskilling thousands of workers to get cost out of the process and increase efficiency around drilling. Here's what he said about how they use Gen AI.
Productivity of wells. We used to run logs and all of these things, but in areas where we cannot run all of these logs to see the subsurface in terms of permeability, porosity, now you can use AI to predict, machine learning in terms of predicting failures and all of it. We can predict now because there is a lot of data that comes. AI is helping us to transform the way we are managing all of these equipments and reducing the downtime, increasing our efficiency, reducing our carbon footprint. And this is, transformative, as I said, for our industry.
Industries are obviously moving at different speeds on this fact. Sanofi, for instance, say that drug discovery holds a lot of promise when it comes to AI, but it's going to take years to actually yield results. He's positioning his company to be first when it comes to that. I also had a chance to speak with the head of AWS, Matt Garman, about where we are in the technology. There have been a lot of questions about whether, after really rapid growth, Gen AI development has hit a wall. Here's what he says about that.
The technology is moving at an incredible rate. I don't know that we've seen a technology progress as fast as it has, and I think one of the challenges of that is it's hard for everyone to keep up. I think everybody externally loves to point that, like, oh, maybe AI is hitting a wall. No, it's not, and it's just because if you look at any of how these technologies evolve over time, oftentimes you'll make a lot of progress on one path, and then that path will run out of steam. But then you just find a different path, and you continue to go on from there.
As you can see, Ramon Laguarta, the CEO of PepsiCo, is also on that panel talking about what a game changer this has been for the supply chain and productivity. After the break here on Squawk on the Street, Pepsi CEO will join me here at Davos to talk about that, the consumer, and a lot more. We're back in 2 minutes. Stay with us. There and then to me.
Okay.
Welcome back to Squawk on the Street. I'm Sarah Eisen, live from the World Economic Forum in Davos, Switzerland. Joining me now is PepsiCo CEO Ramon Laguarta. Nice to see you again.
Nice to see you, Sarah.
I was talking about the optimism that I think is palpable here on the ground around a new Trump administration. For you, do you expect it to yield higher consumer confidence and spending?
I think the Trump administration is going to be pro-growth. It's going to, help consumers feel better. I think consumer confidence is a factor, and also for us as companies, deregulation will help us. Hopefully, there's a reduction of taxes, and as well that would help us, operate more efficiently in the U.S. And the U.S. is a critical market for us, and everything that happens in the U.S. impacts PepsiCo at a grand scale.
Where do you think deregulation will help?
I think deregulation in general is good for business. We're having too many bottlenecks for expanding our business in some particular areas, from permitting to others. I think reporting is also an opportunity as we simplify our company. So we believe that deregulation will help us be a more efficient company, and with that, we can reinvest that money into other parts of the business.
How's the consumer doing? You mentioned that you're hopeful that we'll see a boost in confidence. Growth has been pretty solid. How do you characterize the state of the consumer right now?
We're optimistic about the consumer in general around the world. We're seeing inflation decelerating in most of the market. So, okay, it's 2 to 3%. That's much lower than it was in the past. We're seeing wages continue to grow, unemployment very low across the board. So that makes us feel confident about the consumer. However, we're seeing in the U.S. particular, and some other markets globally, bifurcation. We're seeing part of the consumer base that is doing very well, and they're obviously spending in services, spending in entertainment, spending in experiences. But we're seeing other parts of the consumer that is not doing so well. I mean, and this may be in the U.S., 30-40% of the families that are struggling to get to the end of the month. So clearly, for companies in the consumer space like us, we have to have multiple strategies. We have to continue to give value to consumers in terms of portion sizes or entry points or value packs. At the same time, we need to continue to innovate, because the consumer is ready to pay for more when you offer functionality, when you offer convenience, when you offer health and wellness opportunities. So we're playing on both, and that we're optimistic. We think that as a company, we've always been good at evolving our portfolio, evolving our marketing practices, and that will do well for us.
You mentioned that food inflation is down. So are we back to normal levels? Because you and all your competitors were at this place where prices were rising double digits. Yeah. Packages were shrinking. Is that over?
Yeah, I think it's over. It's over. Actually, 24 we had much lower inflation. Our raw materials, still labor was a little bit higher. I would say we're in a place where we can manage this as we were doing in the past through productivity. We can reduce inflation in our cost structures, and therefore we don't need to increase prices in those unaffordable ways. And I think that will help consumers. Obviously, consumers will get used. They're getting used to new price levels, and we can see in some segments that consumption is picking up as well.
I noted your optimism around the Trump administration. However, RFK Jr., if he gets confirmed, will oversee the FDA, and it seems like he's out for big food. What do you expect?
Listen, the way we think about it is we've been leading food transformation for many years. We've been leading sodium reduction. We've been leading sugar reduction. We've been leading fat transformation. We've been leading actually artificial colors removal. We don't have dye number 3 in the United States.
Oh, you don't have red dye?
In any of our products. Mm-hmm. Now, what I would like to have, and we do this with any administration, how do we work together with the administration in a, I would say, science-based food policy, and also pragmatic in the execution, where we can move the American food industry to zero artificials? I would set a very high standard for all of us. Like, can we do this in 3 years? Can we do this in maximum 4 years?
Can you do that in 3 years?
We can do as at PepsiCo, but I would like for the whole industry to move to that level. Otherwise, it would be an unfair situation. So can we work with the government, and we will put our best efforts in having pragmatic, science-based food policy that moves the whole industry, I would say, out of home consumption and in-home consumption to zero artificials. I think it's doable.
But what about processed food? He's also complained about processed food and could potentially make changes when it comes to food aid or school lunch programs. Wouldn't that be painful?
I think, along with the artificial removals, we think we should work on transparency and communication. I think there has been very not science-based communication about what is ultra-processed food. I think we cannot misinform the consumer and lead to kind of negative perceptions on anything that is not fresh. I think the world needs packaged food. The world needs high standards, safe and high quality food. And we need to educate consumers. I think we need to tell consumers what is in the products. We need to educate consumers on how we use kitchen logic to cook our foods, and make sure that they understand that products that are packaged don't need to be ultra processed. And I think that is a complex communication that I think we need the government, we need the whole industry, and we need to give the consumer fair information, transparent information.
Is your just to be clear, how much of your portfolio would you consider processed versus ultra processed?
I think most of our portfolio is processed, and we have also fresh products. Like we have gazpacho products. We have hummus. We have such a broad array of products that gives consumer options for all the occasions around the day, and our products are available throughout multiple reach points. So our ambition is to be always everywhere, and we want to give consumer choices across the day, nutritious, tasty, convenient, and that's the essence of our business.
Is it possible to ban processed foods from school lunches?
It's impossible.
Or?
No, I think we have to have very high standards for school lunches, and we have K-12, a lot of products that participate, products that have very low sodium, products that have whole grains, products that are very nutritious. So we are in schools, and I think we will continue to be in schools.
Food stamps?
Food stamps as well.
Yeah.
I think consumers should be given the choice to consume any products, and I think any product fits in any diet. We're emphasizing portion control as a key element of consumption. If I give you data, about 5-10 years ago, most of our portfolio in the U.S. was in large bags. Today, 70% of our portfolio is in small bags, small portions, either through multi-packs or just single serve. So consumers are moving in their choices. They're moving to a smaller portion. I think our products belong in any diet, in any day of consumption, in smaller portions. And that's one vector of this strategy, along with continue to change the portfolio to healthier products, to products that provide convenience, products that combine nutrition and convenience. So again, it's something we'll do organically. It's something that we've been doing inorganically. If you think about some of the acquisitions like Sabra, which gives us a huge opportunity to have plant-based protein in mini meals, or brands like Siete, which also gives us the opportunity to expand beyond snacking into meals, which is one of the strategies that we're following in the last few years.
And before we let you go, just on the news that recently broke, the parting gift from the Biden administration to you is the FTC sued you for what they call giving unfair pricing to one big box retailer versus others. You have come out strongly against it, said that that's not what you do. I just wonder if this is something you expect to be reversed in the Trump administration, and how you're preparing for the fight.
We obviously feel that we haven't broken any law. We are very strict with our commercial practices and legal practice. What makes us what's very encouraging is that the two commissioners in the FTC, the two Republican commissioners, said that those were the worst cases they have seen in many years, and they had really no substance. So we believe in the legal system, and we'll obviously defend ourselves. And I think common sense will prevail.
Ramon, thank you very much for the time here in Davos.
Thank
Good
you,
to see you
Sarah.
always. Ramon Laguarta. We're not done. Don't miss the CEO of Gap, Richard Dixon. He's going to be joining me a little bit later this hour, Carl, to talk about the turnaround that he has engineered in all 4 of their brands.
And what a turnaround that's been, Sarah. Fascinating. We'll see in a bit. Sarah Eisen out in Davos. As we go to break, watch Horton today. The home builder does beat estimates, reaffirms the full-year guidance, not exactly helping the stock this morning in a fairly constructive tape. Dow's up 250. We're just off a session high. Stay with us.
NBC.
Welcome back to Squawk on the Street. I'm Seema Modi with your CNBC News Update. The dismissals of January 6 related cases are underway as incarcerated rioters are set to be released from jail and prison following sweeping pardons and commutations from President Trump. More than a dozen dismissal motions have been filed so far. They are signed by Edward Martin, a January 6 defendant advocate who is now acting U.S. Attorney for Washington, D.C. At least 2 new wildfires have broken out in Southern California as meteorologists warn winds could hit up to 100 miles per hour today in the mountains and 70 miles per hour on the coast. The Palisades and Eden fires are still burning in Los Angeles County and are now 63% and 89% contained. Vice President J.D. Vance swearing in Marco Rubio this morning as Secretary of State. He is the first of President Trump's cabinet picks to take the oath of office. Rubio said the president's primary priority will be furthering the national interests of the U.S. and making the country stronger, safer, and more prosperous. Carl, I'll send it back to you.
All right, Seema, thank you very much. Checking on stocks about an hour into trading here. Dow's up almost 300. S&P at 60.23 is just a bit above the highest level so far of the year. Let's get to Dominic Chu with more on this move in crypto this morning as well. Hey, Dom.
Hey, good morning, Carl. So we've raised the ceiling ever so slightly on those record levels for Bitcoin, specifically on the cryptocurrency. On an intraday basis, at least, we did hit over 109,000 over the course of the last day and a half or so on Inauguration Day. So if you take a look at Bitcoin prices, currently at 103,670, we did, again, hit kind of a new ceiling level here. So we're still generally within the same band, but keep an eye on Bitcoin prices. They're pulling back after hitting, again, a record intraday level over the last couple of days. Now, that's creating at least some buzz for some of the crypto-related stocks that are in that ecosystem as well. If you take a look at some of the names that we most closely relate to the move in Bitcoin prices, names like, say, MicroStrategy, a Bitcoin proxy, down about 6% right now. Coinbase Global, Mara Holdings, Riot Platforms, among the names that have moved higher and then have now backed off a little bit with the pullback in cryptocurrencies generally from the last couple of days. And then just one thing to point out, some of the smaller coins besides Bitcoin also saw a move higher to some record levels. Solana was one of them, currently at 239.50. The reason why I want to highlight it, Carl, is that Solana is the home system for that Trump meme coin that came out over the last few days, hit a fever pitch going there. That coin's value has dropped a little bit from those highs, markedly so actually. But Solana did hit a record because that's the network that Trump meme coin was on. We'll keep an eye on that and other altcoins as well. Carl, I'll send things back over to you.
All right, Dom, talking a bit. Dominic Chu. Still to come this morning, the outlook for energy under Trump 2.0, what it means for the sector as you got West Texas at about a 2-week low. Don't forget you can now catch Squawk on the Street anytime. Just listen to and follow the Squawk on the Street podcast, available now on Spotify, Apple Music, and more. We're back in a moment.
guarantee.
Big morning on the Hill for the president's Treasury Secretary pick, Scott Bessent. Let's get to Emily Wilkins with the latest. Morning, Emily.
Morning, Carl. Well, yeah, the key Senate committee has gone ahead and approved Scott Bessent's nomination for Treasury Secretary. You saw all Republicans and now joined by 2 Democrats, Senators Mark Warner and Maggie Hassan, go ahead and support Scott Bessent's nomination. He has now cleared one procedural hurdle. He will now be going to the Senate floor, and the Senate is obviously trying to get through as many as Trump's nominees as quickly as they can. Certainly, there's some controversial ones within the bunch where we're wondering exactly what's going to happen. That's not the case with Bessent. He's expected to go through easily. I think at this point, we're just keeping our eye out for news on exactly when that's going to be, exactly how many more Democrats might support him. And then after that, it seems like he's going to be easily falling into the new Treasury Secretary job. Guys?
All right, Emily, thank you. Emily Wilkins. Well, President Trump declared an energy emergency aimed at unlocking additional powers to jumpstart production. He issued a slew of executive orders in the energy industry. This was just after he was inaugurated. For example, resuming processing export permit applications for new LNG products. Also pulled the U.S. out of the Paris climate deal, suspended new offshore wind power leasing, and revoked President Biden's 50% EV target. 50% of sales be EVs. Here to talk more about energy regulation in the new administration. Again, Capital founding partner John Kilduff. John, let's just start with an energy emergency. Is there one?
There's no acute shortages at the moment, so it's curious descriptor of it. I do think that there's a lot in the industry who felt hemmed in by the Biden administration, and now this is, I guess, their liberation to move forward here if they so choose. But in terms of an acute supply situation, no, we don't have that, thankfully.
You know, you put it interestingly, the if they so choose. What are they going to choose? Because we've had many conversations here at the desk that it's not clear that even if you can produce more, you want to. What do you think?
It is not entirely clear to me either, David, in that I mean, I've seen estimates out there for a potential growth of 3 million barrels a day here for U.S. crude oil production. It is just hard to see that. I can tell you that some of the Permian production, some of the fracking production is giving off increasing amounts of water and other byproducts. That's an issue. Also, too, with the consolidation in the industry, I don't see Chevron and Exxon, who are now leading the charge, really necessarily rushing in to poke more holes in the ground, particularly with the precarious oil price where we're at. I mean, we are holding above 70 pretty consistently now for a number of months. But the ability for that price to head rapidly lower is there. And then now all of a sudden you are impacting your rate of return, if any, in the fracking space. So I think we need to be, don't necessarily pop the champagne corks here that we're going to get a rush of new production into the system.
Yeah, well, interestingly, the 3 million additional barrels was part of incoming Treasury Secretary Bessent's plan. So let me, I hate to say it, drill down on this with you for a minute. The Permian, you made this point. Chevron, Exxon, you know, it's 10 years ago, it was kind of different in terms of all of the smaller independents. What's changed there, and how is that then going to change the equation, given that's our Saudi Arabia, for lack of a better term?
No, it is. And don't get me wrong, they're awesome operators. What they've done with the whole region is just incredible. The late President Carter was actually made fun of to a degree, talking about getting oil from shale rocks. So everybody thought he was out of his mind at the time. But I can tell you that 2020, the price collapse, the negative oil price, really set the industry back. The several years of avoidance by banking industry of supporting and financing drilling. But also, too, the rate of returns just weren't there. It was sort of a return of capital, if you were lucky, as opposed to rates returns on capital, which is the new emphasis. So with the consolidation and everything else, we sort of like to say have the adults in the room, and it's not just the wild-eyed speculators out there saying just drill, get more barrels out. There's definitely some accountants in the room now who are saying, let's hold off. Let's wait to make sure that we can get our money back and then some as a result of all the policies that are out there. We have a big overhang from OPEC plus too right now. If they were to open the taps even a little bit, as we saw then we would see lower prices as well, which would hurt the economics of the Permian region and other fracking industries.
Yeah. Finally, let me just end with natural gas. We've talked about, it powers a lot of electricity in this country. There's an enormous need for electricity given all the data centers that are going to be running large language models and the like for AI. Is there a significant growth opportunity there, perhaps under the Trump administration?
There is, I think, for both pipelines and obviously export facilities. What I will say is this: while the industry, braced at President Biden's pause, what I'm concerned about is that if these LNG exports do ramp up to a material degree, U.S. consumers will find themselves competing for those molecules, and those molecules could become quite pricey. So this is another case of, there will be winners and there will be losers. But I will say we should definitely see more natural gas coming to market as a result of the Trump administration, particularly as more and more pipelines get green-lighted, permitted, if not encouraged, David. So, yes, that is going to be a boom industry for sure under the Trump administration.
All right. Well, we look forward to revisiting it with you over time, John. Always appreciate it. Thank you.
Thanks so much, David. You will.
Still to come this hour, China's reaction as Trump takes office. We'll head live to Beijing. After this, don't go away.
Can a stock be so bad that it's good? One dividend-focused investors scouring the market for beaten-up behemoths that could be poised for turnarounds and pay you a decent yield. Find out which ones they are. Tune in to Market Navigator later on today on Power Lunch, 2 p.m. Eastern Time.
tomorrow.
President Trump signing a number of executive orders on day one. No immediate tariffs on China, but that said, factories there are getting ready. Our Eunice Yoon has more this morning from Beijing. Hey, Eunice.
Hey, Carl. Well, Chinese exporters are implementing various strategies to adjust to President Trump's tariff threat, as I found out in the manufacturing belt of Guangdong.
Hoping to beat Trump's tariffs, furniture seller Harry Lee is doubling the number of products he ships to the U.S. and storing them in warehouses there. 4 out of 5 of his tables and other furnishings are sold to American consumers. Lee expects the stockpiling will force him to raise prices as much as 10%, even before the tariffs. I have to ship them in advance and take on more risk, he says. Water purifier maker Zhengyu is scouring the globe to supply the U.S. by creating a new production base outside of China. Zheng's company, Tesron, is considering Vietnam, Malaysia, and Mexico, but at the moment is leaning towards Dubai, even though it will increase his costs by 30% compared to China. The domestic market is too competitive. We've been waiting to jump out of it for some time, he says. Trump's tariffs gave us the final push. Lung Rong, who makes skincare products, is worried he might have to stop exporting to the U.S. completely. His goods got hit with tariffs north of 20% during President Trump's first term. With his thin margins, Lung is hoping he can pass on the cost of any tariff to his customers. In the past, we all felt the U.S. market was the greatest market that everyone wanted to sell to. But with all the uncertainties and unfriendly decisions, the U.S. is less attractive now, he says. It's a real pity.
And all of those factories are in discussions to try to figure out how to break up the burden of Trump's tariffs. So they're thinking how much they can absorb, how much their U.S. partners would be able to take on, and ultimately how much the American consumer could bear. Guys?
Eunice, I know something that would help a lot of those domestic Chinese manufacturers would be if consumers in China started to buy more stuff. Where do things stand on something we've talked about so often, which is ways to try to stimulate consumption in the country you're in right now?
Well, it's funny that you mentioned that. We were just discussing that in the office today because the Lunar New Year is coming up. And this is a traditional time when Chinese people tend to travel a lot, they spend a lot, so people are looking at this time as a gauge of just how well the consumer spending is. And already we've been hearing a lot about discounts being offered, and including here in Beijing, where we're getting offers for to be able to buy more iPhones as well as cars. So there's definitely an effort here to try to get people